Taking control of the banking function in my life and installing a warehouse of wealth into my reality has without a doubt been one of the most influential decisions I've ever made. If you're anything like me, you grew up in a financial system where no matter what you really did, you always felt like you were swimming against the tide. It didn't really matter how much money you were making. It never felt like you could get ahead. You're always like racking your brains as to why that's happening. And instead of that, you want to have control, clarity, certainty, and you want to feel like you're actually making progress. Well, this video is for you, because what I'm going to share with you exactly why I took control of the banking function. I'm going to walk you through an example here, a very common one, something you've probably faced, especially if you're over 16 years old, you will have seen this. And then I'm going to show you exactly how I changed it, and then open the door for you to potentially change it for yourself and take control of the banking function in your reality. Because depending on if you qualify and certain circumstances in your life, you can do this for free and regain so much control. It's going to be literally life-changing, and the goal of this channel is to empower you to live life free and on your own terms. And of course, in this commercial world, controlling your fiat currency and the flow of it is very, very important, because it empowers you to either be able to live a life free or one of constraint. That's just the way it is. So let's talk through this example. I want to buy this car here, which I actually did do 5 years ago before I knew anything about controlling my own banking function. So what I did, and this is going to represent my cash flow, my work goes in here, as I earn it goes in, and then it's got to come out the bottom. We've just lost some money there, it's rolled off screen. It is what it is. So I saved up money from the business that I was doing at the time, and to pay for this car I took this, and this is going to represent my bank account here. So the cash flow went into there, and it was in my bank here. And then of course, this is the bucket that represents the title for the car. For me to buy this, I have to pay somebody, right? I have to deposit money from my bank account to buy the title of the car. So I did that, and I paid cash, which I thought at the time was a pretty good decision, and we'll walk through the other common scenario for buying a car in just a minute. I thought that was a pretty good decision, but now the cash that I had is in somebody else's bank account. I've lost all control of this. Yes, I have the car, and if I wanted to sell the car, I could regain access to this currency in here. But if you've ever bought and sold a car, you'll know it's never going to be the exact same amount that I've put in. It's always going to depreciate, unless it's a very specific scenario where I add value to the car, which means adding more money, or the car appreciates because it's a collectible. As you can see, this is a 2005 Subaru. This is depreciating every single day that I own it. So regardless of if I take back that liquid capital, it's always going to be less. At the same time, because I no longer have access to this, I lose on the interest that I could have made from reinvesting it, putting it to work elsewhere, spending it on other assets that are going to make me more money. I can't do that because it's over here. I no longer have control of it. So my bank account is back at zero. Yes, I own the car. Yes, there's some equity built up in there, but cash flow, I'm back at zero. And when you roll the clock forward, like to present day, 5 years down the road, I've had to invest more money into this through repairs, and when I sell it, I'm not going to have anywhere near the amount that I put into it. So that's the most common way that people, maybe not the most common way, but that's one way to buy a car. The other way, and I'm just going to move this over here so we don't have to do the rattle, is I'm going to bring on a third bucket here. Introducing the third bucket. This is my bank account now, and I'm going to change the labels over, but this is now my bank account. It's got zero in it. Oh no, I want to buy a car. How am I going to do that? Well, this is what is called financing, and you get a third party, which is represented here by the third party financer. And what they're going to do, they're going to now pay for this. Your bank account doesn't lose much, but obviously what you have to do now is pay back the third party financer. And you're not just going to pay them back the amount that they paid, you're going to pay them back more with interest, and this is what most people are doing, right? So every month your cash flow is going to go from your bank account into the third party financiers until your debt is cleared, until you've covered this amount plus the interest. So if you play that scenario out, after 5 years your bank account has not grown, you've paid more to interest to the third party. Yes, again, you own the car, but it's depreciated just like it did before. It's not going to have gained much value. you're going to have less in value than what you've paid out, especially because you paid the interest. And this is the other scenario, and you can change car for anything else that you want to buy. These are the two main pathways that we have access to, or at least what we're shown, what we're given in this fractional reserve banking environment that most of us are just put into. So when you look at this, these two options, neither are really that good, right? Because what's going to happen is you're always going to be racing to zero. You're either going to be going out to work, saving up money, building up your bank account, paying in cash, but then losing the interest, and then to get more money, you're going to have to go back to work, go back to business, have more money come in. If you're going to finance the same thing, you're always going to be paying interest out. They're just not good situations, and you're always racing to zero. And it was something that when I realized this was going on, it kind of drove me a bit crazy, because I was like, how am I going to get out of this? How am I ever going to not live in one of these scenarios? I didn't want that. So in the want of not wanting that, it opened my mind up to different opportunities, and I was very blessed to be connected with two now business partners out of Texas that are really, really good dudes, and they discovered a completely different mechanism of how to do money. And I'm going to talk to you exactly how that works, because this is what I do now. I've been doing it for quite a while, and I'm seeing great dividends. It's because I now will be controlling the banking function. I'm going to show you how that works. And this is what I would do if I was going to buy a car today. So when I get my next car, this is it, or asset or house or whatever it is that I want to buy, this is exactly how I'm going to do it. So we're going to keep this, I just don't want too much rattling, you know what I mean? So this is going to be the same thing. We're going to move these around. This is going to be the title for the car, exactly the same amount. This is going to be my bank account, but this is now going to represent a specially engineered dividend-paying life insurance policy. And that is just a tool that we're going to use to create this new system. There probably are other solutions. I know other people use slightly different tools, but that's the one I have access to. It's the one I believe is the most proven. It's stood the test of time longer than, it's been around since before fractional reserve banking. They've been around for 200 years. This is just the tool I use. The concept can be achieved using other tools, but dividend-paying whole life insurance, specifically an accumulation policy that is engineered for my scenario, my personal economy, that's what I'm now using. So I'm going to make the same amount of money, but what I'm going to do first, before I buy the car, I'm going to put it into my policy. So now my bank account is back at zero, but my policy has funds in it. And what I'm going to do to buy the car, I'm going to give myself a loan from my own policy. I'm then going to take this money, I'm going to buy the title for the car. So now my bank account is back at zero, but I own the car and I owe my own policy. So now any payments I make per month, and interest is still included here, but I'm going to pay myself interest. I'm going to take money from my bank account and repay my own policy. So if you think about what that's going to do over the next, say I did that for this car and I did this 5 years ago, what would happen now is I would own the title of the car, I'd have repaid my own policy, so all that money that is here is going to find its way back into my policy. It's not going to come here, but it's going to find its way back into my own policy. So if you really think about this, it might take you a while to get how this concept works. It means I took the cash that I'd earned, I paid it into my policy, I loaned it back to myself, I paid for the car in cash, still the same amount, but now when I'm paying those payments back, it's going to my own policy. So I'm not going to end up back at zero. And I'm seeing this already in action for other things that I've bought while I have a policy in play. I'm not back at zero, so my account isn't going save up zero or take on finance then get back to zero. It's now just steadily accumulating upwards, because I can only lend and only loan back what I put into the policy, and there are of course limits to how much I can put in per year, and there's some stipulations, and as I said, not everybody qualifies for this, but it's obviously a privilege to be able to pay into that policy, because then I can loan it back, recapture all of that interest over however many years I'm paying it off. I get to pay it off on my own terms at any time of the month. I pay it into there. So if you extrapolate this out and think about this as a banking function, I still use a normal bank because my policy isn't big enough to support everything in my life, but it's getting closer every year, and I approximate within 15 years, I won't need to use a traditional bank for anything. I can just use my policy as the banking function in my life, and anytime I make money, pay it into the policy, loan it back, and then buy whatever I want. And if you think about the outcomes of a system like this, it means that my money is never tied up in depreciating liabilities without it being at work, because whilst I've loaned the money back here and paid for the car, this is depreciating, but that policy is always appreciating. It's always making interest on the money it's loaned. I need you to think about this, because it took me a while, but if you just pause this video and think about the difference in your life, if you had access to something like this, it's an absolute game changer. Now that's a bit of a cliche saying, but it really, really, truly is, because it means that you're not getting caned on insurance, you're not losing out on the interest of money tied up in depreciating liabilities. It means that you have more control and clarity, because you know exactly how much that policy is growing, how much you can have access to, and it means that you're not reliant on a fractional reserve banking system where inflation is baked into it, where you're designed to be penalised for accessing your own capital, because if you have access to it, they can't use it for their interest gains. Instead, you have access to something that predates fractional reserve banking. This was around before 1913, and it means that you regain all of that control and you regain all of that velocity, and you never just race into zero. So I've only been doing this for a few months now, but I can already see the difference. It's unbelievable when you get to buy something and then pay yourself back for it and have access to that capital again and not just lose it. It means that your dollars don't have one life and then just die. They have multiple. You can use them in multiple different ways. It's just a better environment. And as I said at the start of the video, you can get one of these set up for free, depending on if you qualify. You just need somebody to help you do it, I think, because as a concept, what I've shared here with 3 buckets and a Subaru in a grey area, a grey cloudy day, is a lot different to actually doing it in your day-to-day life. So if you do want help in doing that, I cannot recommend Brandon and Nate from Unlimited Life Concepts enough. Resonate on a very, very deep frequency, really like-minded with myself, and I believe for you as the audience of watching this channel, their whole goal is to empower you to live free as well and live unlimited. It's a very shared mission, hence why I found them. I really, really resonate with them, and I think you will too. And you can get set up with them via the link in the description. Get yourself a call booked in and just talk through the options. As I said, you can't buy these policies. You cannot. I didn't pay for this. I didn't pay them for it. They get paid a commission on some piece of it, and I'm okay with that, because I prefer to them have that than me have this function than pay a bank, you know. So it's, for me, a no-brainer. It's something worth investigating. I just go talk to those guys, book a call in, and see how this could work in your personal economy. Have that review, because for me and my wife and my family, it's just changed everything. It's condensed our path and condensed the time to financial freedom, because again, think about the functionality here. We're not leaking, we're not just losing interest, and I really just can't recommend it enough. I know I'm going to continue to do it for forever. You know, money has to flow in this world, in this commercial world, so it's all about, as a sovereign man, setting up systems where you can direct that flow to suit yourself and benefit yourself.